template we're looking at is the range to New York Open and or London Close rally. Generally, this is going to be a non-farm payroll event or a FOMC event. The market will be in consolidation. Again, we're sticking with the synopsis. The idea that dollar index is trading bearishly, so we're bullish on foreign currencies. This is going to be classic scenario for non-farm payroll, and I was saying this last night, but I can't remember. I didn't go through the entire recording to see if this was one of the parts you could hear, but I was saying in recent years, non-farm payroll has not shown this pattern as it has in the past. It used to be, it would be a consolidation, maybe 20, 30 pips, maybe 40 pips for the whole day, and then when non-farm payroll comes out on first Friday of every month, you would see explosive moves after that. Okay, and because it's not like that now, it's been volatile all the way up into non-farm payroll. It's a little bit of a I still look for this phenomenon, but it doesn't happen like it has happened in the past. So because I think of the increased volatility, once we start calming down again, when markets go to a lower level of volatility, you'll see this being a classic scenario going into non-farm payroll. This always will occur at interest rate announcements as it relates to FOMC. Okay, so when countries come out and with their adjusted interest rate announcements, this is what you end up seeing. And the way you understand if it's going to be a New York Open or a London Close scenario is that if it's going to be a non-farm payroll day, well, the low is going to be run out initially, and that's where you're going to be looking to be a buyer. And this is what I use to trade non-farm payroll. When you've seen the live examples of what was it, January and February, or March. Was it February? I think it was February, March. Whatever it is, they're recorded. They're on my website and on the YouTube channel, but. I use this template, and I use the one later on when we talk about that one as well for trading those non-farm payroll particular days. The idea is that we're bearish on the dollar, and we may be consolidating in the dollar as well. And then eventually, once we get to non-farm payroll numbers released at 8:30 in the morning in New York time, the market will dive down below the lows. Okay, but the context of the market is still what? Bearish dollar, bullish foreign currencies. So what they'll do is they'll sink it below the consolidation leading up to the numbers release in New York for non-farm payroll numbers, and then they'll explode to the upside. And then there'll be a late day, usually like 1 o'clock to 2 o'clock in afternoon New York time. The range will draw out that long. Okay, when is it going to occur at London Close? When there's going to be a FOMC announcement around 2 o'clock in New York time. Then you know that there's going to be a setup that forms around that 11 o'clock to 1 o'clock in the afternoon, that time window for the setup. Same scenario, they'll take it below the low or consolidation of the day, and it suck everyone on the wrong side and then explode up. So we're always sticking to the same premise. We're bullish based on a higher time frame premise. That bias, we're going to milk it until it's completely obvious that it's no longer valid. Okay, and you stick to it, you trade it until you can't see it working, then you go the other direction. Okay, and it really is that simple. You're submitting to the possibility you're going to lose money, and your trades aren't going to be perfect, but in between those two price points of when transition takes place, when the market moves bullish and bearish, there's going to be a lot of opportunity to make a lot of money. And just trust me, you're going to have losses, but the wins far outweigh those losses, and it won't shake you, it won't make you nervous, it won't scare you. It will in the beginning because you won't trust it yet, but over time you'll see a handful of losses if you trade a lot over a course of a month. Your winners will more than adequately take care of all that and sweep it all under the rug. As it relates to currency correlation, this is another template that will occur. Again, same scenario. We have a bearish dollar. We expect the dollar to be trading lower. It has unfulfilled support levels it hasn't reached to. It has a range to trade down into on the dollar, so therefore there's expected movement to see expansion on the downside for dollar. It opens the gate for upside objectives to move higher on daily ranges on foreign currency. Again, we're using the scenario that we're assuming that we're trading the Euro USD. And say, for instance, that we have seen recently the down move in the dollar, and maybe the cable had been rallying, but the euro had been in consolidation. Once the dollar, okay, shows its hand and wants to go lower, you got to start looking for buys in foreign currency. But if there's a currency that's consolidating and not following suit with higher pricing, look at the crosses that it's related to. Because I'm a fiber and cable trader, which is Euro USD and British Pound USD, if I see one of those pairs being consolidated and they're holding those particular currencies in a tight consolidation, but the other one's closely correlated to it, like the British Pound USD is, if pound is rallying aggressively in concert with the lower dollar, but euro is not, if I've missed a move in cable, I do not care, because I'm going to look at that profile that's staring you right in your face right now. This template is what I'm going to look for in fiber, because once euro pound meets its support level, because that's what's going to happen to cause cable to rally and euro not move. So what's going to be happening in the euro pound? Euro pound is going to be dropping. So once it hits a level of support, cable will move to consolidation and wait. Euro will be permitted to rally. And then you'll see this template unfold. You have to look at the time of day when it's occurring. You have to be looking at your crosses. Euro pound, if you're going to be a fiber or cable trader, you have to understand that particular currency pair. If you do not understand that currency pair, I promise you, you will get smashed. You're going to miss all kinds of wonderful opportunities, but you're going to get crushed, and you'll be like, I don't understand this. This doesn't make any sense. It won't, because you don't understand how they're manipulating the entire currency board. It's manipulated with the crosses, okay, through the use of the majors. If they manipulate euro dollar and hold it in consolidation, they're doing it because they're moving the crosses. It's simple as that. It's very simple. If you're seeing euro being in consolidation and dollars rallying, dollars dropping, cables rallying, and euros in consolidation, big setups are happening in euro yen. Euro yen is going to be rallying because euro is going to be consolidation. You're going to be setting up a beautiful opportunity that day or whenever the euro pound hits its support level it's waiting to hit. Once it does that, all focus needs to stop off of cable because it's already shot its wad. It's done. It's going to be waiting up there for for euro to close that gap so they can rebalance because they're correlated pairs. They will move in time given that amount of time. Remember that submission to time thing we've been talking about? You got to submit to that. Cable may be leading the pack now, but like it says in the Bible, the first one now shall be later last. Fiber will get back up there with it if you give it time. Look what's recently happened. I called a long, drawn-out consolidation last fall in euro. I told everyone where it was going to go multiple times. It's in recorded format. It's all there before it ever happened. And it's all based on these understandings. I'm not changing things around, and you won't need to either. Once you understand it, you agree with the ideas, you subscribe to them, and you stick to them. Come hell or high water, these are the principles you're going to stick to. And once you do that, you'll always find a way to get in sync with the banks. You won't every day be in sync with the banks, but you always find a groove eventually over the course of a week. Plenty of opportunities for you to bank some pips. There's many ways to skin a cat. And this profile or template for intraday price action is seen when the decoupling happens, when currency correlation has met its objective. In other words, the scenario is arriving at a bearish dollar. Every currency that's foreign should be rallying. If a particular currency is consolidating, man, check the crosses because that will unlock everything. And then come back to that one, because when those crosses meet their support or resistance level respective to what you're looking for, the next shoot or drop will be in that consolidated pair, and then it'll close its range and get back in sync with its correlated partner. For instance, fiber and cable, those two are sisters. One might be stronger than the other on a short term, but they'll always get back in sync with one another. They always do, and that's how you use currency correlation. All right, the next.